So machine 400 each, so 2 unit will be 800. So 800 over here stated 160 is the accumulated depreciation. So 10% straight line will be 10% 80. Here I have 160, means 2 years. So start with opening. Disposal of 1 unit during the year, 4 steps. We need to know the cost, the accumulated of the asset you're disposing. So here, first step, what is the cost of the asset? We know it's 400, so 1 unit will be 4. Take it out, credit and debit here. Then focus on this 400, already depreciated 2 years, meaning 40 plus 40, 80. So is the 80 in this accumulated here? Yeah, if it's disposed of, you take out debit and you credit to here. So we are transferring the cost and net accumulated. So we transfer 320. 320 I sell for 300. I make a loss. So step 3 is bank. I make a loss of 20. Disposal done. End of the year, do I still have remaining asset? 1 unit. So carry down, brought down, and I'm going to depreciate 10%. So depreciation will be 40. What is my balance here? 200 minus 80, 120. Net book value will be 400 minus 120, 280. Done. So this is the double entry. Now, if we look at accumulated depreciation, how many items are there? We got opening, we got closing, which is transferred to here. Depreciation we know is credit side here, and disposal. This is step 2. And step 2 means transfer to here. Correct? What if I do it this way? Our cash flow this week's tutorial, if this is not given is opening accumulated, closing accumulated. So we put it here, During the year, there's a disposal, and we know the accumulated is 80. Can we find the missing figure here? How much? 200 minus 160, balancing is 40. Okay, so this can be this can be the question they ask you to find the missing figure depreciation. What if I give you this? This are not given. This are not given. And these are not given. We have 2 unknown. Cannot find missing figure. We got how many unknown here? 1. Can we find the missing figure here? Here, how much? 200 minus 12, balancing is 80. And we know here is step 2, 80. Debit of accumulated has to be disposal. Meaning we know here 80. Can we now know the cost? The cost of the asset we are disposing will be, here will be 400. So when we know this, we will know this. Is it okay? All right. Then what is I make a loss of 20, in or outflow? When I make a disposal here, I lost 20, in or outflow? Inflow, how much? 300. Is it okay? Now, this example, if I got, this is 2017 and 2018. Last year cost of asset, this year. Last year accumulated, this year accumulated. Depreciation during the year, and this a gain, means there's a disposal. Gain, 5. Cost of asset disposed is 2002. So normally this is related to cash flow. You will be given 2 years financial statement, and you open your PP, your cost. Property, plant, and equipment means for all the assets. Always start with opening. How much is my cost? Opening cost. Closing. Always put this way, and you got closing, you can bring it up. Accumulated depreciation 1716, opening 17, closing 16. And always start with opening, closing, bring up. And what other info is given? There's a depreciation charge during the year. Where should I put this depreciation? Where should I put the depreciation? Depreciation, accumulated depreciation, two different things. This is depreciation during the year. Put there. Here. Accumulated depreciation, I have opening, closing. There's a depreciation. There's a disposal. Transfer to here, right? So now, depreciation during the year. Is it here? How much? 20. Okay, done. Gain on disposal 5. In which account? Disposal. Gain on which side? Credit. Debit. So gain is 5. Done. And the cost of the asset disposed of is 2002. Cost given. Step 1. Disposal is 2002. Credit and debit here. Do we have how many unknown are there? We have 1 and 2. How many more? 2 more. So we cannot find balancing. How many unknown? 1. Find balancing. 190. So 30 is my balancing figure. Go where? Go to disposal. Here. Correct. Can we now find the missing figure? What is it? Bank. Money received. How much I actually received from this disposal? 2175 is my balancing figure. Can you see? Then over here, I got 3000. I got 3002 here. 3002. 3000. Missing figure is 200. Why I debit my PPE? Why I debit balancing 200? Because of new asset I buy. Credit bank, debit asset. Is it okay? So, in or outflow, this question here, this example here, we have both in and outflow. How much is my inflow? Yeah, I sell is an inflow 2175. I make a gain lah, but my inflow is 21. Do I have outflow? Yeah, because I buy asset 200. So this 3 entry or ledger is very important for cash flow. If it's 20 marks question, easily here up to 6 marks. Okay, now that's last week we discussed it. Here one more time. So how are we going to apply it to our statement of cash flow? So you have your lecture note with you, the format. The format, we have one direct method, indirect method. Okay, not direct method, indirect method. So our exam most of the time will be indirect method. So why we call it indirect? First of all, profit and cash flow. Are they the same? Profit 10, cash inflow 10. Are they the same? They are not the same. So profit, I can have credit sales. A lot of credit sales. What happened to my profit? I sell and sell and sell on credit. Profit will go up. The more I sell, the higher is my profit. But what happened to my cash flow? Unchanged because it's a credit sales. So profit and cash is different. If I borrow money today, what happened today to my cash flow? Borrow money today. What happened to my profit today? Same. I receive 1 million loan, my profit cannot be 1 million. Okay, 1 million is a liability, not my profit, not my income. So it's two different things. However, we know there's a relation here. When profit up, our cash flow in the future most likely it will also go up. Okay, profit down, then most likely cash flow will go down. But of course, they are two different things. But somehow they are related. Profit up, possibility of cash inflow will be there. So, our statement of cash flow here, statement of cash flow, we use indirect method means we will start with profit before tax. Is it from here, profit? Then we convert to cash. Therefore, we start with profit before tax. Use indirect method. How many activities are there? What are the three? First one, OIF. OIF, operating activities, investing activities, financing. OIF, operating, investing, financing. Okay. OIF, operating, investing, financing. I explain cash flow from investing first. Operating later, investing. So investing, if you look at the notes, you have purchase of property, plant, and equipment. In or outflow? Outflow. Outflow. I buy. Not because more asset inflow. It's about cash flow, outflow. Disposal of PPE is a proceed that you receive. Is an inflow. Okay. Investment activity, investment. I will have interest receipt or dividend receipt. Because of investment, I got dividend. Because of investment, I got interest. Inflow. It's all in your note. Okay, not? What is after investing? OIF. Cash flow from financing activities. Financing means we need money, we need financing. Business need financing. Their financing is either equity financing or debt financing. Two types of financing, equity and debt. Equity is share, debt is loan. So we start with equity first. Equity is share. I need financing from my shareholder. I issue share. Issue of share. In or outflow? Yeah, I issue share, receive money, inflow. Then you link this issue of share. Must I pay dividend? So issue share, borrow from, shareholder, pay me money. I must pay them dividend. So dividend paid will be here. Outflow. So equity done. Debt means I need money, I can borrow. So I can issue loan, note, I can issue debenture. Issue share is equity, issue loan, note, issue debenture is to receive money. So I just put in here loan receipt, repayment of loan, or redemption of debenture. I redeem back the share, the debenture. Repayment of loan. Which one is in? Which one is out? So now, issue of share we have dividend. Loan we have paid. Outflow. Cannot logical? Done. This is for IF. Okay, investing and financing. Operating is the most complicated one. Operating. If you look at your note here, operating, we got three segments, three areas. 1, 2, 3 areas. Here. Cash flow from operating activities. We have three areas. Area number 1 is here. Adjustment area, movement area, and the payment area. Paid and paid. Cash flow from operating activities. Adjustment, we add depreciation, add interest expense, add loss on disposal, less gain on disposal, less interest income. These are cash flow adjustment for part operating activities. So how to identify profit before tax here? Is it after all my income and after all my expenses? That's how we got a profit. So my profit is after the income and expenses, after a net of profit. Okay, now, so this profit, is it already after depreciation? After the interest expense, after the loss? That's why my profit lower, right? So as a cash flow adjustment, I plus back, cancel out for cash flow. Remember just now we have to convert from profit to cash. So this is how we convert to cash. Because all these are non-cash flow items. We do not pay for depreciation. We less gain, we less interest income. So you notice here, these are expenses. We plus. Income, we minus. So in your note, you have a bad debt. Bad debt is income and expenses. Bad debt is expenses. So if bad debt, what must I do? Plus or minus? Plus. Expenses, we plus back. Do we plus electricity? Do we plus wages? Do we plus telephone bill? No. We only adjust these expenses or income. Loss is an expenses, add back. Gain, take it out. Okay. So what are the expenses? This one you need to practice. Wages, salary, traveling, all this no need one. These are non-cash flow item, adjustment item. Section number 2. Let's say over here you can see there's an increase or decrease. In what? 3 things: inventory, receivable, payable. Increase or decrease in inventory, receivable, payable. So my example here, if last year my inventory is 100, this year 120, increase or decrease? Up, increase. Last year receivable 1519, up. My payable also from 80 to 100, up. So both, all 3 up. So increase in inventory, how much? 20. Because it's 120 minus 100. In or outflow, inventory goes up. Yeah, so outflow. Asset up, outflow. Receivable also up. Asset up, 40. Same. Asset up, outflow. Payable up, follow. Payable, is it up? Yes, 20. Means my cash flow also up. This one here cannot explain now, but pure memorizing first. Asset, opposite. Liability, follow. Up, down. Payable, up. Liability, follow. Sometimes not sure up or down, you use inventory as a basis. Inventory is the easiest to explain because no way you can explain receivable or payable. Cannot make sense. Okay, now up, why down? Why down means down? Cannot make sense. Okay, now so pure memorizing. Unless for inventory, it makes sense. Okay, now? Of course, it will make sense until we discuss the direct method, which is not important. That's why memorize. Okay, now? I'll explain probably next class. Okay, once you understand the concept, everything first. In the part 2 done, the third segment will be interest paid and tax paid. Now, when you look at interest paid, just now we have one here. Interest paid is because I borrow money, I have to pay interest. Interest paid here. It is also in operating activities. So how? If we look at the answer, actually the standard allow both, either here or here, operating or financing, either one side. So our exam, let's follow the model answer. They put it in operating. So we don't have to put it in financing, otherwise we take up twice. Interest paid, we put it in here, operating, under segment number 3, third one. Interest paid, tax paid. Is it okay? So we have 3 activities: operating, investing, financing. Then you look at your format. At the bottom, you notice there's a net increase, decrease in what? C and C, got not the whole format? Net increase or decrease in cost, cash and cash equivalent. 3 lines at the bottom, right? The second one, cash at beginning, and cash equivalent at end of the year. So our format will be 3 activities. OIF ended with 3 cash and cash equivalent. First one is net up or down, cash and cash beginning at the end, and also at the end. Okay, so we learn SPL. Start with sales, cost, gross, and other income expenses. We learn and we practice many times. That's why you are familiar. What about SFP? Non-current asset, current asset, inventory, receivables, prepayment, bank cash, equity, liability. Why you practice and practice, you are familiar. So this will be the first time you are exposed to statement of cash flow. It's also important, but this will be the first time, means you need to practice. Okay, so we already know the format. How many activities? 3. Ended with 3 equivalent, cash and cash equivalent. The first operating activity, we got 3 segments: adjustment, plus add depreciation, interest expense, loss, minus gain, minus interest income. Then the movement, increase or decrease in 3 things: inventory, receivable, payable. And the third segment will be paid, interest paid, tax paid. Operating, done. What is operating? After operating, O, then investing, not investment. Investing activity, it will be purchase of PPE, disposal of PPE. Investment means interest received, dividend received. And last one, financing activity. 2 types of financing: equity and debt financing. Equity will be ordinary share with loan. Debt financing will be loan received, loan repayment, interest. But again, we don't put interest here. Done. Okay, the format part. So go back, familiarize with the format. Then question 2. Question 2. We start with question 2. Tutorial 10. Okay. Okay, required. Prepare statement of cash flow using indirect method and also both. So we start with indirect method, the most common one. How many activities? Statement of cash flow, the heading. First one is cash flow from operating activities. Here, statement of cash flow for the year ended, whatever the date. First activity will be cash flow from operating activities. Starts with profit before tax. How much? 17414. Here, PBT 17414. Here, 17414. Half a mark. Okay. Before we look at my answer here, what is after PBT? We have three segments. The first one will be operating activities, PBT. Then we got three segments. First segment is about adjustment. What are the adjustments? Depreciation must be there. Loss or gain on disposal. Interest, both interest income, interest expense. So when you start with PBT, you look at up here, some of the items we need to adjust, not all. So finance cost is actually interest expense. Must we adjust? Interest expense is an expenses. Yes. Not because it's expenses, because it's interest. Should we plus or minus as adjustment? Interest expenses we plus. So 1749. Interest expense 1749. No depreciation given here, but there should be depreciation later. And other income, not sure what is this. So let's look at note 1. There were no outstanding in respect of interest payable or receivable as at either year-end, means at opening and also closing, no outstanding balance. So I wrote there no opening and no closing balance for both interest receivable and payable. No opening, no closing. This one very important note implication. No opening, no closing balance for interest for both receivable and payable. Okay, this one later. Number 2, profit before tax is actually after we charge 6784. Must we adjust? Depreciation? Yes. Plus minus? Plus back your interest expense, plus back your depreciation. So I have a depreciation. Yeah. 6784. Okay. Note 3. During the year, the company sold 5667. Sell good, sold equipment for 5667. What is this? I sell my equipment for 5667. Huh? Is there a proceed? Disposal. Money disposal, is this the cost 5667? Accumulated, net book value, or bank? I sell it for 5667, means I sell it for this amount. It's a bank. Receive 5667. Okay, disposal. Under which activity? I buy and sell asset. Under O, I, or F? I buy and sell asset. Asset is I. Buy asset, sell asset, invest in asset, disposal asset. I. So this one should go to investing. Realizing a profit of 1806. You make a profit. Should we adjust gain or loss on disposal? Gain on disposal, should we adjust? Yeah. Loss, we need to add. Gain, we must minus 1806. GOD 1806. We have to minus. Note 4. Other income, this one. Other income 101. Now for as shown in the SPL, stood up of interest received from fixed deposit. You receive interest from fixed deposit. Interest income 101. Must we adjust? Interest expense adjust. Interest income adjust. 101. Plus or minus? Income we must take it out. Gain on disposal, take it out from your profit. Here. So 17 plus minus minus, I got 2404. We call this operating profit before working capital changes. Segment 1 settle. Now, number 2 is increase or decrease, correct? Okay. In our trial balance, if I got a sales, trade receivable, I got a purchase, I got asset, whatever the asset. I told her when I prepare SPL and SFP, must all the item here be taken up when I prepare SPL and SFP? Yes, it must all be taken up, then only can balance. Then now we are doing cash flow. All the item in the statement of cash flow must be taken up or adjusted. Okay, then only for the cash flow can balance statement of cash flow. Okay, so all the item in SFP must be adjusted. Then your cash flow can balance. So now we have 2 years of statement of financial position. Where are we now? We are already here. Inventory, receivable, payable, movement. So we start with inventory. Last year 29, this year 28. Can you put a tick in your answer? Question. This one I'm adjusting now. Last year 29, this year 26. Increase or decrease? How about down? Down. Down means cash flow. Asset is terbalik. Down means cash flow. Up. So decrease in inventory 29 minus 26. It will be 3015. Up or down? Up. Next one. Look at receivable. Last year 14, this year 12. Tick. Down. Trade payable, trade receivable down. Cash flow up. Show working. Two zero 34. And last one, trade payable. Go to current. Yes, we have trade payable. Put a tick. Last year 23 8. This year 23 5. Down. Cash flow. Liability follow. Down. Down. Down by 270. Okay. So this one in exam 3 marks. All you have to do is just take this 2 years, put it there as working, done. Of course, you have to decide up or down. So 2404 plus minus, you got 28 is cash generated from operation. Segment number 3 is what? First one is adjustment, movement, paid. Interest paid. Remember note 1? What did note 1 says? No opening, no closing balance. If this is the case, you see, I'm supposed to pay the bank my interest for the year is 1749 expense, in which I added. Then when I add, I must minus out from here 1749. Same amount because of note 1. No opening, no closing, amount same. Why like that? Example here. Yeah. My interest, I pay 1749. And I did not pay extra, or I did not pay anything more or less. How much is charged to SPL? How much is my expenses? 1749. Follow this one or this one? Follow this one. 1749 is my expenses. How much I actually paid for these expenses? Same. That's why no prepayment, no accrual, no closing balance. No accrual, no prepayment, even from brought down. That's why it's the same. Okay, what happened if I tell you here, I pay 1750.59. However, there's a prepayment of 10. Is it here? So how much I actually pay? I actually expense of? So can you see amount expense of and amount paid is different? Yes. So and as a result, I got closing balance. If there's no opening, no closing balance, SPL and bank paid same. Okay, I don't have this to you also. Yes, I have. So if got opening, got closing, open T account, show working. Otherwise, 1749, same. What is after tax paid? What is after interest paid? Tax paid. Tax paid, I can tell you, past question, 99% similar one. How? Here. Tax paid, look at tax liability. Last year, how much? Last year. This year, 21. Opening 19, closing 21. So, show working, 3 marks, all in all. Here, opening, working 1, tax account, opening 1926, closing 2101. Get from there, tick. So, SFP, opening, closing, done. Second step, how much is the amount charged to P&L? How much is the tax expense? Amount expense of is 2570. Where should I put the SPL? Debit or credit? Here, 2570. Remember, our SPL for expenses is here. Cannot? This is how much we pay. So what is the missing figure now? Tax. How much is this? Tax. 2395 is bank. I pay tax 2395. How much is expense of? 2570. So 2395 is the amount paid. Two, 395. Understand? Correct or wrong this one? 2395. Just now 2395. Balancing bank. So is this correct or wrong? Tax paid 2395. Not correct. No mark. Why? Because you have no bracket. Bracket means pay outflow. No bracket is you are telling me is an inflow. Put bracket line, just follow the steps. Tax paid, yeah, I pay 2, 3. So here, 1, 2, 3, 2, 4, all the way 2, 4, 6, 7, 5. What you want? You give a name to this. Don't think too much. You don't need to follow that. But what you do is you just look at the heading here. It's a cash flow from operating activities. You just put a net at the front. Done. This level, you put a net at the front, enough. Yeah, net cash flow from operating activities. It's a bit different from there, but it's okay. So operating activities, done. O. What is after O? Investing activity. Normally, what are they? Buy asset, sell asset, interest income, dividend income. So this one, a lot of mark. up to 6 marks normally, whereby we need this. Investing activity, we need PPE. We buy PPE. Question, 9810, last year, this year, is this cost or is this net book value? Net book value. Our SFP balance is net book value, unless they show us separately cost accumulated, then net book value. So this is net book value. Look at note 5. 96, 98, and 102. Oh, now they gave us the cost and accumulated. Cost last year 124, this year 133. The accumulated 25, 30. No worry, put in opening, closing first for our working. Here. PPE, opening 124, closing 133. Half a mark, half a mark. Accumulated, check. 256, 30978, no 5. Half a mark, done. So now we are adjusting PPE. Let's tick PPE first. Oh, tick already. Okay. Remember, SFP item all must be ticked. They only can balance. Okay, done. For opening, closing. Go through the note. Which one is relevant? Note 1 is about interest receivable payable. No opening. Forget about note 1. What is note 2? Profit before tax is after charging depreciation 6784. It's already adjusted in cash flow. Must we put it here? 6784. Where? Depreciation during the year. Where? Which ledger? PPE, accumulated or disposal? Accumulated. Where? Debit or credit? Depreciation. Okay. 6784. Continue reading the note. Note 3. The company sold for 5667. You sell it for this amount. PPE, accumulated or disposal? Disposal, debit or credit? I sell it for this amount. Step what is this? Step 3, cost accumulated bank. So this is bank. I received 5667. Understand? Continue. Realizing a profit of 1806. You make a gain of 1806. Where? Debit of disposal, right? This side. Have we adjusted the gain or loss in our gain and the depreciation in our statement of cash flow? There, yes. Depreciation 6784, gain 1806. All right. We already plugged in this one. Yeah, another half a mark, half a mark. Okay. How many missing figure are there? Two. Cost accumulated. How many missing figure? Can we find the missing figure now? Yes. What is the missing figure? This one, right? How much? Accumulated depreciation. Huh? One, 4, 3, 5. Okay. Where will this go to? When I debit accumulated means credit to where? This is step number 2, right? Normally. So here we go to disposal, debit, and we know you should credit here. 1435. Can we now find the missing figure here? How much? One 5296. Go where? I debit, where they credit? Cost means cost account. I dispose of an asset which costs 5296. So where's the missing figure now? Now here's 133 plus 5, 138. 138, 124. Missing figure is here. Debit. Why I debit? Because I buy or sell? Buy. Bank. I pay 14196. Must practice, huh? Go back. Huh? Okay, now inflow and outflow. I'm now doing cash flow. How much is my inflow? Let's look at the bank. Bank. Inflow is 5667 because I sell. Outflow 14. Let's put it in the cash flow account. Statement of cash flow. Under which activity? OIF. I. Okay. I purchase of PPE just now I pay is 14196. Okay. 5667. 14196. 5667. Remember to bracket. Purchase is an outflow. Investment. Buy. Sell. PPE. So when I invest, I will earn some interest, dividend. Earlier, do I have any adjustment on interest? 101 interest is already included. I take it out and I put it in here. And remember, note 1 say no opening, no closing. So same amount. Okay. If got amount, then you have to adjust. Okay. In, out, in. Net is a net out. So follow the heading. Put a net at the front. Net cash flow from investing activity. Settle. O, I. Now F. F focus on what? Equity and debt. Equity means share. Debt is loan. So let's look at SFP. Equity will be share. Here. Equity. Normally, equity we do together with share capital. Can you put a tick? Share capital, share premium together. Share capital, share premium together. Question. Last year share cap is 21. This year share cap 23. Increase. Why? Did I issue more share? In or outflow? In, because when I issue share, I receive money, inflow. So yeah, I did issue share. Then you look at the share premium last year 10, this year about 11.9. Means I issue above par value. Yeah, when I issue above par value go up, share premium go up. Cannot. So we do together. Issue of share. I got two working here. This year and last year share cap plus this year and last year share premium together. So 2.3 and 2.1 share cap. 11 and 10 is share premium. So plus 4231. Bracket, no bracket? No bracket because it's an inflow. So when you have issue share, then think of the next step to remember dividend. Pay or receive? Yeah, we have to pay our shareholder equity. Okay, now? So dividend, look at retained earning. Can you write there? Retained earning is to find dividend paid. Same thing, just like your tax liability. Just like your tax liability, we open key account. Opening is 59, closing is 71. Here, 5971. Okay, this one actually you can call it working 1, working 2, working 3, 4, 5, then this one whatever you're working, I'll give a name, I'll give a number. Okay, so opening 5-9, closing 7-1. Just like your text, opening, closing, P&L, balancing. So opening 5-9, can you find how much is the profit for the year? During the year, I make a 14844. I make a profit. Should I add to retain? Retain earning is the profit made over the years. And this year I make another 1.4. Should I plus? Yes. So I start with 5.9. I make a 1.4844 profit for the year. So I should plus. So you check here, 59 plus 14, I should about 74. I should have 74. But why I got 71 only? 59 from previous year. Then this year I make another 14. I should have about 74. But why my retain become 71 only? Because I pay dividend. So balancing is dividend. How much is the dividend? 3697. Dividend. $3697. Dividend, because we are issue share, we have a dividend paid. You are working whatever number. Refer to that, it will be 3697. Any marks? Bracket. Because dividend paid. Okay, not? So equity, share, and dividend done. Next one will be loan. So check. Loan, yes, I got a 7% loan. Retain earning done, put a tick. Loan, last year 22. This year? 5. In or outflow? Why? Because I pay back the loan. Repayment of loan is an outflow. A loan is a financing, so repayment of loan. I got no space here, but right, you should show bracket working. 22 minus whatever. Yeah. So repayment by 16889 bracket. Is it okay? So in for 316, we got a net cash flow from financing. So 3 activities done. Then we end up with the 3 cash and cash equivalent at the bottom. How to find the first one? First one is to close all this 24. O, I, and F. Can you take 24 minus 8 minus 16? 24,000 minus 8,000 minus 16,000 here. So overall up or down? So you write there net decrease in cash and cash equivalent 108. So this year is a net decrease. $16,355. Cash and cash equivalent at beginning. Cash and cash equivalent at the end. So this one we need a working to get all these 3. So now which one haven't ticked for SIP? Fixed deposit haven't ticked. Cash at bank also haven't ticked. Okay, you write there. Fixed deposit is an example of cash equivalent. Cash at bank, cash in hand is an example of cash. So we have cash equivalent. These 2 haven't ticked. The other side, which one haven't ticked? bank overdraft also haven't ticked is an example of cash. Right? So these three, we show a note, compile them together. First of all, why we call this cash equivalent? Cash in hand, cash in bank is considered cash. Fixed deposit is not cash, but it's similar to cash. That's why we call it equivalent to cash. When I place my money in the bank, can I withdraw anytime? Yes. When I place fixed deposit for 1 year, can I withdraw anytime? Yes, no? Yes, can. Yes. If I place 1 year deposit, fixed deposit, can I withdraw next month, next 2 months? Can. I will lose the interest. I can withdraw anytime. So that's why fixed deposit is similar to cash. Can withdraw anytime. Liquidity very high. But it's not cash, we call it cash equivalent. So we combine all these three together. That cash, a bank, bank overdraft, fixed deposit. One is cash, cash, cash equivalent. So put in closing, your last year and this year amount, just transfer in the three things. You double check and see cash a bank, opening and closing. Bank overdraft, because it's liability, you put a bracket. And fixed deposit. So this is my opening cash and cash equivalent, 2.8. I ended with 2.9. Overall is net in or outflow, increase or decrease? Bracket 2.8. Now bracket 2.9. Out or inflow? Out by 108. So start with 2.8, ended with 2.9 because out by 108. Here, 2.806. Cash and cash equivalent at the beginning. Gap from your working, 2.806. 2.914. Okay. Now, before you see, before we actually do this, in fact, do I already know how much is my net increase or decrease? I don't have to prepare statement of cash flow. I already know I got outflow 108. Clear? Gap from these three accounts, I already know is outflow, our net decrease. But the problem is, do I know exactly where the money come from, where the money go to from here? When I know it's negative 108, I can't tell. So that's why we need to prepare statement of cash flow. The money come from operation 24. Okay, not? Then where did all the money go when I have negative 108? I use some of the money there is for investing. So because you can see from here, I buy PPE. Means it can be because I expand my business. My PPE already old, I replace with a new one. That's why I have an investment. Not only that, can you see I use most of the money to pay back my loan, which is good thing. Okay, to reduce my liability, my exposure, to reduce my interest. So in this case, negative 108 seems to be okay. Okay, right? Done. So you must go back, practice many times. One question, practice 3 times. First time, confirm cannot, must refer answer. Second time, still have to refer. Third time, by right, should be enough. Then move on to the next question. It's almost similar one every question. Right? Don't know. Most likely will indirect one. Now, to understand further why gain or loss, we have to adjust, especially gain or loss here 1806. So our working here, PPE, accumulated depreciation, disposal. In or outflow for disposal? Inflow 5667. I make a gain 1806. but my inflow is 5667. Okay, 1806, 5667. Gain on disposal is 1806. Gain, is it already included in my PBT? Sales, cost of sales, gross, gain, all the way expenses, PBT. Is my PBT already included 1806? So it's higher. But is my cash flow 1806? My cash flow is 5667. So what do I do with this 17414? We reduce it by 1806. Take it out first. Then only we include 5667, but not under operating. We put it under investing, 5667. Can you see here? It's about adjustment only here. What happens if it's a loss? If it's a loss, means this one lower, correct? But we know loss is also an inflow. So we add back our profit first. Then only we recognize how much we actually receive in investing activity. So this part here are adjustment. We apply the same concept to interest income. Is interest income already included in here? Interest income 101. Yes, interest income is investment. So we take it out first and we put it under investment. Clear? But we do not adjust for wages. We do not adjust for salary, wages, electricity, water bill, because all that confirm is operating. Okay, so only some expenses we adjust or income. Any question? No? Then I show you the answer. Okay, question 1. I haven't discussed, but there's some amendment. Now, continue. Continue. Part B is direct method. Indirect, direct method. Okay. So direct method also got 3 activity, O, I, F. But I and F is the same as indirect method. So no issue for IF. The only difference is O. Direct, indirect method, the only difference is only the operating activity. I and F is the same. That's why these two here, same as direct method, indirect method. Yes. The only difference is operating don't have the direct method, right? Huh? They don't have operating direct method. No, okay. OIF is for indirect, correct? Yes. Direct method also OIF. Same, different. Okay, not both methods can be used. But exam most of the time will be 99% will be indirect method. But I mean different as in the presentation only. End of the day, it come back to the same answer. Yes, it's different method to get the same answer. Yes. Continue. This is the working. So we have one receivable and payable working. We just now we did not open because we are doing indirect method. Only direct method we have to open receivable payable. Okay. And yeah, this one solution 3 is next week's tutorial. Huh? Today done. 5:30 already. Our class at what time? So nah, pretend only mah. Pretend like hardworking. So fast finish ah. Okay. All right.